Welcome to TradeTheMBI.com. This is John. This report is for the 8th of April. Beautiful continuation on the downturn. We can see that there's a slight uptick in futures. We had this one figured all along. Coincided beautifully with a lot of the signals that were in some of the deep red configurations that I've been showing you over the last week plus. And from the daily signals, you can see quite a mixed bag, more towards the ugly side. Go to the Dow. Look at all that. So if you think there's a turnaround, we will have to look at the numbers because all of these are new sells and new 3 sells, which could mean very well that they've gotten extremely oversold. And that's not going to be hard for us to see, so we will take a look at it. And here's the NASDAQ. NASDAQ, a lot of new buy signals in there mixed in with the older sells because the NASDAQ was a lot weaker than the others as we had been defining relative weakness. And it's interesting because I always get the questions, well, if I know that the daily is going to be down, what do I do with intraday? And it's very straightforward. You literally have the bias knowing that with the short signal, you have to be prepared for larger down moves. So you just have to be more careful with your stops on the buy signals. Pretty straightforward. ES, nice. Well, number 1, 2 kind of crossover here with the steel moving above green and above red. The cascade dip in here means you're going to have to see a turnaround in that. You haven't dipped below the red line, so that makes today quite interesting for its development. You see a little bit of a gap up to the bottom side of it here. So that's going to be the real play. I mean, as far as this goes, though, it's still bearish until we get some kind of pivot from there, dipping below the negative 13, though. It's the first time we've gotten into that setup since the last dip. And you can see, though, even in short, and this is what throws people off a lot, you can get some pretty decent upside days within an overall short construct. And that often scares people to the short side, but it's normal. And look at how ugly that NASDAQ, and you can see that the dark red readings have been all over this for some time. And so as I've been talking, it's been a dichotomy between the markets where the NASDAQ has been really ugly in relation to the ES being sort of in the middle of the road. The Dow had been the premier one, but slow because it had not made the new highs that the others had already made. So it's relative, but still in line. You can see a little bit of improvement there, but nothing on the daily, and the Dow is below the red line. Potentially could see that pop above. That would actually be our first indication of a turnaround even before a pivot to the upside. And of course, we've already started to see it. I think it was the Qs that gave a buy signal on the 78-minute before the close. SPY did not, but it was just because it didn't quite get far enough above the red line. In fact, I think I have an SPY 70. I'll plop it up real quick. There it is. Yeah, just didn't cross above there, but you can see the dip below the red line, so even a pop coming up here is likely to come back and retest that low again. So going to be trying for some people who are, trying to dictate what oversold versus overbought is. They're not going to really have as clear a understanding of that. Just kind of muck zone here. You're getting buy signals in the death zone for oil. Not a whole lot to expect there. Gold, while it had converted up, it finally clears the negative zone here. But look at that steel all the way up there. I would expect to see a spider develop here with the green coming back down and the cyan going back up to meet, unless this steel starts to come down, because it's just not generating any construct that you're going to see a pop of magnitude of any kind. And that's reflective also in SLV. Though, does that mean I'm also looking for a breakdown? No, because with this crossover here, you've sort of negated your deep red. This is where I start to look at, okay, every time I'm testing a low that's on the higher extremes, it becomes worthwhile to start to take a look at biting for a long side move on those. X just retraced its positive extremes, got some nice support off of the ABM readings. Still not particularly attractive. I mean, you get the nice dip of the steel in the lower, and this is the opposite of the market, where this is giving you more of a safety reading that you're not getting from the market. You're right at a crossroads for it, so it could break down a little bit further if it's not not going to improve sharply off of this. It's just not an attract. I mean, I'd rather see something that's either way down low or way up high. I mean, this gives you more in the area of the short category once I get above 0 and start to fade over on my red. So it's not a thrill there with X, CLF, likewise. I mean, yeah, you had the good readings. We were starting our nice progression, and then this market collapse sort of began. Now you're seeing also a split of the green lower and cyan higher. That's usually negative as well. And CLF from an intraday standpoint, you can see with the positive extremes from there, it began its rollover. And continuation sub, I mean, that's a pretty big spread once it started. Hasn't moved a whole lot, and that's just because these have been beaten down so much there just isn't that much left to the downside on them. AIG is just in flat zone. I mean, it's still been rising with the red and white until now. Caved off pretty well, but not anything interesting as far as I'm willing to just want to, jump into. WLT's been interesting, but crazy as this was, I mean, look at these 70 minutes. You got positive extremes on the dip. It started off nice. Yes, we knew we had the positive extreme retraces, did all that pretty quick. Then got overbought on its first bar in the morning. And even though I'm in the safety zone, hasn't really dipped a whole lot, still that's a significant move for a low-priced stock. Still worth intraday buys. You can see the 50K for the first time. I put in a buy on the power mode too, and this kind of illustrates what I've been talking about, and I've shown you this repeatedly, this gap that develops between the steel and the cyan, and that separation. Any pops you're getting in there become just very straightforward from a short standpoint until such time as these meet, cross over, and change, but keeping the steel and cyan separated from the red, white, and green is just a case for more of the same. And till that kind of flips, not expecting a whole lot from any of the pops. So, in fact, we're almost, as scary as that is, overbought. What are we at? Plus 2.5. That's almost overbought. I mean, you're at negative 9, a little bit higher, and you're going to get into yellow and almost into red. So a pop of, plus 4 or 5, and this thing is going to be redlining. But certainly we can look to see if we're going to get a transition where the green will move above. The cascade started right back over here. When it finally moved up above, we turned deep red, and everyone was like, you're crazy, this isn't going to drop. We're only going to make new highs, and boom, crash ole. Let's take a look at some individual ones while we've got an opportunity. So we had the usuals. There was Baidu. And I've left the DOC paint bar, but then when you see the numbers on it, that would indicate the deep red. If I turn this off, just you can see when you buy, so you can see there's the dark red. And of course, it puts in the buy signal on Apple on the 78-minute for it. That's not going to be a good buy. Plain and simple. If we look at the daily on it, ugly. Amazon, ugly, though improved. Now, see, this is where it begins interesting because, all right, here you have a higher extreme histogram. You're staying above the red line. Potential pops here could be attractive if we weren't in these negative readings. And so it's just a matter of looking for that lower percentile reading, somewhere down towards the 30s is better than in the negative 50s, but it just indicates the degree to which the sell-off has taken place from a numeric standpoint at least. But that separation, again, 3 lines down below, and particularly if they're below the negative 13, you've got to start to see some turn up if you're going to have anything that has anything. And I was talking about Google had a pretty decent looking chart. Look at that rise. So this is your closest to what a turnaround would be, and where I would be looking for a stock that's likely to make a comeback. And I was talking about that when this was all the way down here, and sure enough, it turned green on the day before fading off a little bit. And so that was exactly why I pointed that one out. Get Netflix real quick. Deep cascade, but here it is. So you went from these deep numbers to only negative 31. You can see how it responded to it. So a little bit of life showing there, but that is a huge separation. At this particular point, pops can still be attacked to the short side for that. PCLN, likewise, had this target range coming back down here of the positive extremes, and boom, just nicely hit those, even came back down all the way down to here to take out this little level. I mean, that's a full 100% retrace of that total move. No surprise. Even when we saw this pop coming in here, we could see that the numbers were still very negative on that, and that it was likely to retrace, and was expecting the spider because of that, and sure enough, fulfilled it beautifully. Another one people love to give me grief on is Tesla, continuing to go short. With that, every little pop, and this was way back over here when I was talking about any pops, easy to sell into. They told me I was nuts, that didn't I know that this company was worth blah, 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 and it's, I don't care. Simple answer, I don't care. The numbers are the numbers. I'd rather stick with those than to pretend that, something is overbought or oversold simply because, a moving average reaches a number. It doesn't work that way. This is why the Fibonacci's for a lot of these things didn't work. This is also why support and resistances did not work. And, then you get people now are going to start drawing their channels to the downside for correction, right at the point where we're going to start to see more of these lower lows on higher extremes and just about to turn around pops when they're going to be looking for channel breakdowns, because the algos are going to take them below what are their standard supports in that, just to make sure they've cleared all possible excess shares and resistance so that there's a thinner supply, so that when they start to move it, they're not going to be hitting a lot of resistance on that. And that's just the way they do it. Let's take a look at some intraday real quick. Okay, intraday 5K. You know what? Let's start by just doing this real quick. Let me slide over. So I put the boxes in between for you to kind of show you this separation that takes place to the bearish side where the three lines move. Finally converged right there. You get yourself a little buy, and then it started again when we were last talking right up here. Broke away, and you can see the gap that stayed, and every time they connected, it had a tiny little pop, and then what did it do? Separated for the sell. Came back again, gave a nice little buy signal when that converged, and you can see the green crossed above there. Gave you the Q, but you still had high steel, and then pretty much flipped over. And then you might have been a little scared because it's like, oh, I got my sell signal with the conversion, but it popped up just a couple of points. And I attacked that a secondary time, and that's when I started posting the second short that I took, which was the only trade I made all of yesterday, was right here. Didn't do anything, left all this, covered my spot right there, and then marked this one and took that trade, and then did nothing. And you can see the separation wasn't all the way until the end of the day as we slide across. Right here, when we got to this spot, I tightened the stop up and began to trail it a little bit lower, and sure enough, set a stop in early on, and then boom, got triggered there towards the end of the day as it began to make a run. But again, you can see that separation very clean, and then even when you did have the improvement, steel so far up there, you weren't going to get anything out of that. And that's exactly kind of what we're seeing on the daily for now. Now with the daily, you're not going to get as quick a reaction as you get with a 5K. But structurally, it does the exact same thing. The algorithm is just repeating it at a broader scale. So then we got right into here is when you got into your bullish run. And then, boom, it began to split off right about there. We also started to develop the deep red. In fact, I took that short. Where am I short at there? Slide that in there. 42.75 for a small position right there to start the day. So what is that? 42.75. Right in here is the red turn peak, because the expectation is that you'll come back down and fulfill the total of this red. Pretty straightforward stuff. Nothing unique under the sun, as they say. We'll continue to look for any changes. I'll put this chart too. This is the VIX. Always worth taking a look at these as they pop up. and been in this deep red, puts in the yellow candle just at the time we were getting the sell, and sure enough, we had already talked about the continuation, so it wasn't necessary to go through adding to the time and pointing it out. But certainly, if you have indicators, then it's always worth having that type of chart. And all I've done with it, if I put back there, is get the VIX. I attach the D omega for that one, and then I put in the ES daily with a D omega that matches that, and you can kind of capture. Sometimes there's a little bit of a divergence where it'll start to give a bullish signal on the VIX prior to the sell-off of the ES or any of the other markets. It happens. As always, trade well. We'll talk again tomorrow.